generation.
All right, guys, what is going on? Hello. Welcome to the stream, dog. Welcome to Take Profit Tuesday. Easy day, baby. Easy day. You know what I'm saying? Scalps offered. Probably should have held one contract, to be honest with you, but I didn't. Should have held one, but I didn't. And that's okay. I'm not tripping, dog. All right, maybe a little bit, but you know, sometimes you just want to take the money and run, you know? That's when you get the fences, babe. When you don't swing for the fences, that's when you get the fences, you know what I mean? And you're just like, damn, I only took a first base hit. You're just like, oh my God. But it's all right. We'll talk about it. We'll discuss it. We'll have a good time, hopefully. And yeah. So on my, wow, Mason, on my Instagram, as well as the Discord, I shared the first 24 laws with you guys. And I will release 25 through 48 after the video releases on Thursday. Oh, geez, what the fuck is that shit? So yeah, 1 through 24. Again, it's out, right? It's on Instagram. It's on Discord. Wow, that camera really kind of zoomed in on that, huh? Oh yeah. So there you go. You guys have all of the first 24. You all have the first 24. Oh, like the TV show, the first 24. Or was that the first 48? All right, never mind. I got to wake up. What's good? Felix, Toby, Gavin, Willow, Remy, Naruto, Mason, Eberneth, Robert, Eminem, Monkey, Convicted Capitalist, Victor, Flacco, Shay, Amin, Cameron, Crispy J, Bazell, Big James, Pop, Willow. Had 3 contracts long also and closed them all. But you're right. When the market gives, you got to take. Yeah. No, I mean, that's part of the game, you know? Part of the game. It is what it is. What's good, Stephanie? Oh, it is 48. Yeah, so that analogy was trash. I haven't woken up yet. What do you expect from me? 45 points on ES. Moved up bigly. Good job, Cameron. I feel like Cameron's been doing really well lately, which is awesome. Was good. Omar, Nikki, Marius. Anyone else that I might have missed? Let me know. Let me know, chat. But yeah, I mean, while we're on here, take a look at that list. Let me know which one you think sounds the most interesting to you out of the first 24. Right? The law of logic, the law of delivery, the law of the open, the law of the big picture. You know, all that stuff. Let me know. I want to know what you guys think. I need to know. I need to know. And I agree. Willow growth is better than losing 100% or breaking even too. So, all right. I'll break it down for you. We're taking a look at NQ on a 1-minute time frame. And I deeply slept in today. Like, I don't even know what happened. I know I woke up around like 5 a.m. and I was like, yeah, I'm definitely going back to sleep. And then I did that. And then I woke up and I was like, all right, it's probably 8 o'clock. And it was like 10:15. I'm like, oh shit. Okay. Well, I guess I'll get out of bed now. And so that's why I said that on my Instagram story, because I slept through the manipulation, which is, it's not a bad thing. It's just like, okay, well, no longing in here trying to, you know, catch a low or some shit. These lows here, that reminds me of yesterday, dude. Let's go back to yesterday first, matter of fact, before we do anything here. You remember yesterday I told you that I didn't trust those lows? Do y'all remember that? Drop some ones in the chat if you guys remember that. You're like, yeah, you're like, you don't trust these hoes, you don't trust the lows, you don't trust fucking anything, dude. Hell no, bro. I don't trust nothing, dude. I mean, I do, but I just don't trust low resistant lows like that, bro. I just don't. Now do you see why? Now do you see why, chat? Like, oh yeah, John, that makes sense. You said if you were gonna long, it would go lower. If you were gonna short, it would go higher. And I told you yesterday, you know, I'm not gonna trade, but if I had to pick a direction, it'd be bullish. And guess what? We sank. We tanked. So that's exactly why. Low resistant lows. I don't long when there's low resistant lows. That's why. Okay. So again, consolidation around 50%. That's to be expected. And then the rip ass right into the close of the day. Imagine getting stopped out with 5 minutes left in the day. That's just like that's just like a kick in the ass, you know? And that's just a kick in the, it's like, here, take this L 5 minutes before the close of business. It gives you like no chance to re-enter or, you know, anything. So that's, a lot of people got their shit pushed in yesterday. And that blows. And we're already back to halfway. Oh shit. All right, whatever. Anyway, let's come back. So I say all that to give you an update on yesterday, but obviously, if we're going over today, right? Look at these. Same thing. Low resistant lows. I don't want to put my stop there. Okay. So we see that gets knocked out right around 10:30, which is also very important. Why is that? Why would that be important, chat? Why would 10:30 be important? And good job, Mason. I mean, I breezed through the Discord today. I haven't really checked too much. I told you, I mean, I just woke up, hop on the charts, and was like, oh shit, there's an opportunity. Let me take that shit. And got in right before the big move. Love that, don't you? Don't you just love that? Don't you just love getting in before the big move and not taking drawdown? Oh, it's the greatest shit, dude. It's the greatest thing. One of the greatest things, I should say. The law of the worst case scenario. Sounds like a banger. Yeah, that one probably is. That one probably is. I think they all are, but yeah. I don't know why anyone would hold drawdown that long anyway. They deserve to get... Oh, yeah, Willow, I agree. I agree. A lot of reversals happen around 10 to 10:30, says Flacco. Okay. You're not wrong. Not the answer I was looking for, but I'll take it. Naruto said, open of a new 30-minute, 15-minute, 5-minute, and 1-minute candle. Thank you. Wonderful answer. Yes. Open of a new 30 and a new 15. Right, Marius. Yes, Stephanie. Time-based move. And that's why I'm going to show you my entry. And, you know, why it was pretty fucking nasty. All right, so 10:30, okay? You would be correct. 10:30 is a new 30-minute candle, 15, 5, and 1. You'd be right. Okay. So let's come back to don't know which one is the right one here. I guess it's this one. I think it's that one. Okay. So remember, it's mine because I made this, but it's just a representation of time. My time compression matrix, right? And when I gave you this chart, when I gave you this drawing, it is a 1 minute time frame. There should be right around 60 1-minute candles. Might be off by 1 or 2, but I did my best. Okay. So the idea is hourly open, 30-minute open, 15-minute open, 5-minute open, and obviously every 1-minute candlestick has its own open as well. I can't draw all that shit out, but you get it, right? So the thing about any 30, 9:30, 10:30, 11:30, 12:30, all the way, okay? It's always going to be right here, right? It's halfway of the hour. And so at 9:31, 9:32, you know, those first few minutes, that's when we can expect what? If we're expecting bullish price, we can anticipate a potential run below the open. Now, it doesn't have to do it right at the open of the candle. You know, it could immediately trade higher first and then trade below, you know, 5-10 minutes later and then run. Okay, it's not always going to be immediately, but the whole point is 30-minute open, we want a long below that. Same with the 15-minute candlestick. Okay, if we have 10:43, right? 10:44, you might as well just fucking wait, right? Not financial advice. My entries are better than all your mentors anyway, but that's neither here nor there. 10:44, 10:43, right? Okay, then what can we do? No offense, by the way. 10:45 opens, we wait for it to trade lower. Then we can look to long, right? Because that's a new 15-minute candle. What do you think I did today? What do you think I did today, Chan? I mean, seriously, what do you think? Let's draw it out. This should probably be, this isn't even one of the laws, by the way. I probably should have done that, but there's so many laws. It's like we could do 100 laws of trading. I'm not going to do that, but it would definitely be possible. 10:30. Okay. There is your 10:30 opening price. Boom. Okay. So we can just, I guess we could draw it out to 11, I guess. Right. There's your 30-minute candle open. 10:45. 10:45 is right there. And I'll make it a different color just so we can, or a different color and thickness so we understand. Okay. 10:30 drops lower to do what? Take out the lows. Does everybody see that? 10:30. Well, I think it might trade higher first a little bit right into that imbalance, which I'll talk about later too. But it trades up, imbalance, and then slams lower to reach the lows. We get back above the open, trade a little bit lower. We trade higher at 10:39, 10:43. You could trade 10:43, obviously, but right there at 10:45, this is the whole reason why I'm showing you this stuff. You see that 10:45 and you see how it wicks down like that? That right there. That right there, baby. We want to talk about sniper entries. Let's talk about sniper entries, dog. That's it right there. It's not saying you can't trade that. You could. But, you know, whatever you want. What's good, Courtney? Do you have any videos in the coursework that delve deeper into that? Into what exactly? The time compression matrix? It's just time. That's all it is. It's a representation of time. I would say watch the 48 Laws of Trading video on Thursday and then come back to me, because that's gonna. I'm telling you, it's 2 hours and 12 minutes of straight juice. Okay, I don't go on rambles like I do on the live streams. I don't talk any shit. Well, I think there's like maybe a 10-second segment I do talk shit a little bit. But that's only 10 seconds out of 2 hours and 12 minutes. 99.9% of it is straight just, here's the law, here's what it means, here's some examples, on to the next one. It's just straight pedal to the metal, okay? So you're gonna learn a lot of shit. So take your question, Gavin, and then watch the video on Thursday, and then come back to me on Friday. We'll see if your question has been answered, okay? You good with that? Are you good with that? Oh, these are extra large. Okay. Yeah, you're gonna shit yourself. Okay, that's fine. 15-second time frame. I know. Some people, you might not like it. What's good, Harmon? You might not like it. Oh, John, 15-second. For real, this is what we're doing now. The 15-second time frame. It's all fractal. So not only do I disagree with 90% of Twitter, because they tell you to stay off the 1 minute, but none of them get better entries than I do anyway, so why would you listen to them to begin with? I'm even an advocate for going down into a 15-second chart. Cameron loves the 15-second chart. There's nothing wrong with the 15-second chart. It's only gonna kick your ass if you don't look at higher time frames, or if you don't have a roadmap, if you're not looking at like market maker models or levels of liquidity and stuff like that. You got to do all that first before, right? And again, you'll learn that in one of the laws as well. So I think it's the law of the big picture. I don't know. I can't remember off the top. There's 48 of them. But anyway, so 15-second chart. Okay. There's your 1030. We had traded up. This is that 1 minute imbalance. Then we trade down, right? Absorb all that liquidity. We rally, retracement. We rally. So remember, if we have a level of liquidity, okay? Probably should have mentioned this to you first. 21,096. Not one, not two, but damn near 3 highs. Right? How many times have I said this? 2 is great. Equal highs, equal lows, low resistance highs, low resistance lows. Beautiful. But 3? Oh my God. 3 is like almost a guarantee. Oh, that kind of rhymes. 3, almost a guarantee. We'll have to make that a motto as well. On top of the fact that you have those 3 highs put together, okay, level of distribution, we drop lower, level of distribution, right? This was redistribution to drop down. So if this, right, was a level of, it wasn't it was redistribution, because this is distribution to me, right? Distribution, leg 1, redistribution, leg 2. If this was redistribution, what does that become on the opposite side of the curve? Now we're getting advanced. And yes, you're going to learn this shit too. Okay, you're going to learn all this stuff on Thursday. You're going to learn damn near everything you need to know on Thursday. Okay? Almost, probably. If this was our sell side of the curve, and we have liquidity up here, what could we reasonably expect on the buy side of the curve? Now, for those of you that are new, Gavin, Courtney, there's, I think, some others that might be a little bit newer. Okay. And again, I'll go over this on Thursday too. There's a phenomenon in the retail universe. Okay. There's a phenomenon, old support, new resistance, or old resistance, new support, right? And although a lot of us can understand that, right? Let me draw this out real quick for you. A lot of us can understand that, but it's not that simple. Okay. It's just not that simple. Right? Something, you've probably seen this image before. You probably have. Oh yeah, that was resistance turn support. Or maybe right here. Oh, that was resistance turn support. Right? So what happened over here? Oh, it was bearish. You know, now it's bullish. Now, in a market maker model, like a buy model, you would see this. Yes. But if you apply this logic to every chart that you see, you're done. You're getting wrecked most of the time, because it's not that simple, right? You have to have, of course, the formula has always been staring at you in the face. The formula has always been and will always will be time, price, and context. Okay. The law of high probability. That's one of the later ones, by the way. Okay. Time, price, and context. So if you do not have that, your whole old support, new resistance, or old resistance, new support idea will get dominated, and you'll get stop loss, and then you'll be like, well, what the fuck? Trading's a scam. It's not a scam. You're ignorant. You don't know yet. Okay. So this is what I mean right there. You see that? Right here. This, sure, by the beginner's understanding, fucking Google Images understanding, sure, that was resistance turn support. You'd be right. You'd be right. But again, it's the application. How do you know when old resistance is going to become support, or if old support becomes resistance, right? It's why I don't even use that fucking language. I don't even use that language. I use redistribution becomes accumulation or reaccumulation, because that's what it is. Okay? So if we have a sell curve, but we're in a buy model, because remember, there's liquidity up here, and if this is manipulation, what does that make this? This to me is probably the low risk buy. We consolidate here. So what does that mean? That means we're accumulating. If we've already accumulated here, this becomes what? Reaccumulation. So that means maybe not everything, but what you'll find on the left, meaning the sell side of the curve, bearish price delivery, what was once utilized for shorts should now be utilized for longs. And that's why you see that run here. Now, again, if you really, right, because I'm going to show you my entry, obviously. And this is the part where you're going to shit yourself, because you're going to be like, is there a time frame you haven't wicked? No, there's not. Well, maybe a 1 second. I haven't wicked a one. I don't even know how to wick a 1 second, to be honest with you. But a 15 second, okay? So this is the candle that I'm entering on. I'm entering on the way down, okay? Right here, this down candle, that's when I'm long. I do take a couple, I take what? I guess 15, maybe 10, 15 seconds of drawdown. And then you can tell immediately it goes my direction. And then I'm out like up here somewhere. Okay? In drawdown, what the fuck is that? Boom, straight to profit. Right? And again, I say this all the time. We went over this, I think, yesterday or last week. That's the trade everybody wants. They want the instantly to profit, no drawdown. You probably want to over leverage, but don't do that. Okay? Why enter on this? Because I can tell some of you are like, what the fuck? What kind of entry is even that, bro? Like, what are you looking at? I promise a lot of you are looking at the chart like, what does he see over here? Is there an inversion? Is there a fucking what's over here? I don't get it. Why enter on that? That's probably what you're thinking. Maybe. I mean, I don't know. I can't obviously tell you exactly what you're thinking per se. But remember, this was 1045. So what's right here? I'm trying to long below the 1045 open. Ricky, I'm always down for a call with you, brother. I'm always down for a call with you. Okay. I also had this imbalance here that if I was wrong and I was going to come back into this, that'd be okay. Looking at it now, in hindsight, I don't think I looked at this right here, but you could count that as a small time frame mitigation because you have a low here and that low got taken. Yeah, I guess you could count that, but that's not what I was looking at. What I was also looking at was not just the time-based entry, but where did my chart go? Ooh, we took a big retracement. All right. This was also the inversion here. You see that? Remember this, we talked about this earlier. This imbalance was utilized to go lower. So that means what was once bearish should become what? Bullish. And so we see that price does trade, again, even to the low end. We'll take this off. It even trades to the low end of this inversion, but the bodies are respecting it. So I'm also getting inside of this inversion as a second leg opportunity to go higher. You see that? That's why. That's why. So when I tell you, and I've been telling you for years and years and years on end, the best trades you'll ever take are right there. I don't want to give you too much because I want you to watch the video. The best trades you'll ever take are at the right time, at the right price, with the right context. That's it. That's it. So as long as you know where the liquidity is, we have this up here too, and I guess I'll talk about that as well. As long as we have resting liquidity with, it's opposing, right? So we have liquidity on the downside that was taken, so that was absorbed. So this would be opposing liquidity. So this would be utilized for order pairing. Okay, and then my TP was above the high at the imbalance here. That's all I was aiming for. Okay, that's all I was aiming for. I wasn't aiming for up here. In hindsight, obviously I could have, or I should have, but that's, again, everything's easier in hindsight, right? And then that imbalance got traded through and became an inversion to go along. But if you really want to get technical, we'll take everything. Oh no, sorry. Let me go back for just a second. I forgot. I don't know if Jordan D's in the chat. We launched up here, right, at 1057. Why is 1057 important? Because that falls within the window of that 20-minute macro, which is the 11 a.m. 1050 to 1110, and the macro delivered to liquidity. Now, again, this is hindsight, because I looked at it like, oh, why didn't I hold it? You know, what did I miss? Well, number one, I was half asleep doing this shit, so there is that. It's literally, I was up on the chart right after I woke up, like I'm like wiping my eyes, you know, and it's like, okay, let me go long. I mean, it's that simple. It's that easy. Okay. But now that we have the benefit of hindsight, we have original consolidation, manipulation. So that makes this all what? A market maker buy model. So if you're not impressed yet, we had a small time frame market maker buy model inside of a larger time frame market maker buy model. And you know what's interesting too? all ego aside, I didn't even try to do this. But the Corvette logo looks like a fucking buy model, doesn't it? You have the sell side of the curve and then you have the buy side of the curve. That's fucking brilliant. That's absolutely brilliant. The C8 logo and most of the Corvette logos are like a V. Market maker buy model, baby. Come on, chat. You can't argue that's fucking nasty, right? That is absolutely absurd. Look at it. There's the sell side. There's your buy side. There, the Corvette logo is the C8 logo staring at you in the fucking face. You'll never look at the charts again the same. You'll never look at them the same. Be like, oh yeah, I see that C8, baby. This is the left side of the C8, and this is the right side. You know, this is the checkered flag. This is, we're aiming for the Saint logo or whatever that's called, right? The Saint logo. So, hey chat, look, however I can get you to remember this shit is how I'm gonna try and get you to remember, okay? But I noticed that the other day because I think, oh, you can't see it. You can't see the flag back there, but at least you can at least see the Corvette logo, right? So you can Google it if you need help. So please give me a second while we do this. I mean, this whole thing here is like a redistribution, but we don't always have to have every single state, even though you kind of do actually, but right. And then we could even say there's consolidation here as well. So could you see all that? Could you see all that? I agree, Ricky. I agree. So, if you've never seen this before, this has been out for quite some time. But I'll show you anyway, because, you know, we always got new members coming in or new viewers coming in all the time. And again, you'll learn this as well. On Thursday, I'll go a lot more in depth, but if you've never seen this before, this is my version of a market maker buy model. We're looking for highs, we're looking for levels of liquidity, that's here, with equal highs or low resistance highs or triple highs, okay? We're looking for distribution, redistribution, something on a higher time frame, or at least seeking liquidity. And then like I just showed you, I'm trying to long at the low risk buy or inside the first accumulation, ride the second accumulation, which is reaccumulation, to go higher. So you see that? Target, distro, manipulation, accumulation, reaccumulation, liquidity, right? Gray box, red, pink, green, pink. You see that? It's always in order. It will never be out of order. 2 will never come before 1. That just doesn't work. And that's it right there. Consolidation, distribution, redistribution, manipulation, accumulation, reaccumulation, seeking opposing liquidity. Do you see that? That's nasty. That's absolutely nasty. Disgusting work. And I'm telling you, if you only look for stuff like that, if you only look for this, that's the kind of trades that it gets you. Okay? Oh, now we're kind of back up again. I don't know what to expect for the PM session. I'm done for the day. I gotta go do shit as well. I gotta go buy some groceries, really. So you always love doing that shit, right? This is your. We were just on what, a 1 minute, right? This would be a 1 minute market maker buy model, okay? But that's not to say that you can't have another one inside of it. And I've shown you guys this as well. original consolidation, distribution, redistribution, manipulation, low risk buy, and then reaccumulation to go above these highs. But that reaccumulation was the second leg on the smaller time frame, but it was the first leg on the higher time frame. You see that? This shit gets complicated. It's very complex. I get it. But this is why, and honest, I really shouldn't be doing this publicly for free, to be fair. Because this shit is nasty. It really is. I mean, look at my students. Half of them are fucking funded. Okay? I really should only be doing this in the Discord to the members here. Okay? But I try to be generous. This was all, you know, given to me. I want to make sure I give it out to. All right? And the reason I do this so repetitively is that way so you guys actually start to get it. Because anybody can come on here. Look, I'll post it again. Anybody can come on here onto this YouTube channel, and they could take a screenshot of this and then go print it off, put it on the wall, put it on their desk or some shit. And then, you know, they think they just might have the key and that's it. Like, oh yeah, I'm going to start a signal service. I'm going to do this and do that and all this bullshit. That's not how it works. You might have the roadmap, okay, but you still need the experience. You still need these nuances. You still need to understand time, price, and context in order to really get it. So I want to give you the repetition over and over and over again. I may not talk about market maker or MMXMs. I might not talk about them every day. I mean, hell, yesterday was like bullshit, dude. I hated yesterday. Yesterday was dog shit, right? Sitting near 50%. We got upside liquidity. We got downside liquidity. What can I do with that? You just got to wait. But it's Tuesday, baby. And Tuesday almost always is a banger. Tuesdays, Wednesdays, and Thursdays are some of the greatest days to trade. Middle of the week, Tuesday, Wednesday, Thursday, prime trading days. It's not to say you can't trade Monday or Friday. It's just historically, just look at it. Tuesday, Wednesday, Thursday, beautiful trading days. So what's today? Tuesday. It's a good day to trade. C8 signal service. Yeah, that might be, using the title C8 might be a copyright infringement, but I didn't want to go over this just yet, but I guess I might as well tell you now and just spill the beans. I plan on going live on Instagram later today. I need to do a test run. My car has Wi-Fi in it, so I want to connect with that and then make sure that it works before I start going live on a regular basis. So I plan on doing a vocal series, because it's not, it's not going to be charts and stuff, because I'll be in the car, obviously. But I do want to start a Instagram live series called Corvette Conversations. So drop a 2 if you're excited for that. Drop a 2 in the chat if you're excited for Corvette Conversations. It won't just be about cars. It'll be how to get them. It'll be how to, financial literacy, maybe business literacy, trading literacy, maybe some leadership stuff, like maybe just random shit. I don't have like a set schedule on the topics for that, but I just want to be able to, like, I'm talking to you right now, right? But different, actually being in the car or out somewhere doing something, and just having that conversation, with you about certain things and taking questions and stuff like that. And it'll be open for the public. It won't be like it is now where it's like member only chat. It'll be an open discussion for everybody. Okay. Anyway, let's get back to it. So that way we can wrap this up and then that's it. So based on this original consolidation down to the low that's been set, we were trading right around 25%, maybe closer to 50%. But the difference here, right? Because some of you still might think, oh, well, John, hold up. Earlier in this live stream, and then even yesterday, you said you don't like to trade around 50%. Right. No, you're absolutely right. But the context is different here because we have liquidity resting here. That's a high probability target. And if we were to measure from that target instead down to this low, we're in a premium, sure. But that higher target, we're in a discount. And then on top of that, if we look at the day, if we go from equities, which is up here somewhere, I don't know where it's at, like up here. Jesus, equities is up there, right? That may not be the target, but it's just a reference point. After manipulation with that liquidity here, dude, we're even below a 25% level. Like we're in a steep discount. So almost however you measure it, okay, you're still in what I consider to be a discount. You're close to 50%, sure, but remember, old distribution becomes accumulation or reaccumulation to go higher. Okay, so does everybody understand that? Drop a 3 in the chat if you understood what I just said. There's a difference between trading near 50% when price has upside and downside. That's different. But if the market presents where you have a liquidity run, so you can't really justify shorts, but you can justify longs, and we're below 50%, that's different because now we've got time, price, and context. So that's two different scenarios. Okay? So just to make sure everybody gets it. Number one, yesterday, hold on. That's right. Okay. I got lost in the sauce for a minute. Number one, yesterday we had upside up here. That's still probably gonna be a target later on. And then we had downside here. So when we're at 50% of that and we can justify longs and shorts, I do not want to be trading around that. Not in a discount, longing in a discount, you got wrecked. Okay. And I don't really want to short in a premium either. I mean, you can, not yesterday at least. Okay. But today is different. We already traded lower and lower and lower and lower. And then we made a lower low below an old low. Uh-oh. What is that? What is that? All right. A lower low below an old low. What's that? Turtle soup, right? Wink. Boom. Then upside, we can long that. All right. That's the difference. Okay. I don't really have anything else for you as far as lessons and ideas and stuff. I mean, I think today was really clean for Nasdaq. ES also had not the same but similar. If we can just look at her for just a minute, or ES for a minute. I don't know why I said look at her like it's a car. Those triple highs that we had on Nasdaq were not the same for ES, but we did have a short-term high and then an imbalance above that. And then we had a 930 low, and then this got ran just like NQ. But 59.35 is a daily time frame / weekly time frame low. Okay. Oh, that's right. We got to do that. Oh, yeah, we got to do our measured move. Oh, yeah, you're gonna like that. Okay. If the low is 59.35 and a half, if we drop down Oh, shit. Price range. Okay, there we go. All right, if we drop down 5 and we got to drop down 10, right? Boom. Look at that shit. Old low minus 10, baby. Old low minus 10. Measured move. Look at that. Look at that, dude. No one can predict lows. I already told you how to do it for ES. It ain't going to be every time. It ain't going to be every day. You're not going to be 100%. Of course not. But a lot of times, I've been telling you, measure 5, 10, 15, and maybe 20. So if 35.5 is your low, well, what's minus 10? 25.5. Right there. Then what do you get after that? What's resting right there? Imbalance on the way to a liquidity run, because this is that old low, and then a short-term low as well. That right there is an inversion model, is it not? Is that not my very own inversion model that I gave you for free like last year? Measured move, inversion model, and then this is like a retracement, and then boom. Same thing. It ran in sync with NQ up to these highs and then up to that high as well. So price does what, chat? Trades from liquidity to liquidity. That's what a market maker buy model is. It's that simple. You know what? That's actually a good question. I don't know. Do we have an image for the inversion model? I don't think we do. I feel like Cameron might know, because I know he's posted stuff before. Or if any of you have it, you could post in the Discord and I'll pin it. But off the top of my, that was a long time ago. Off the top of my head, I don't think I have it available. I just have like so many images and charts and all kind of shit that I've downloaded that I have so much in my history. It would take me a long time to find it. And I wouldn't find it before the live stream is over. Because I don't rename things either. I can't search it. Oh, there was an image. I have one. Cameron, you're fired. Stephanie has one. Okay. Well, Willow and Stephanie posted in the Discord, and I'll, do that. I mean, I guess we can make one right now. It's not hard. You're dropping the charts chat right now? Okay, cool. All right, let's do this. I always forget how to do this, bro. Don't go anywhere. Let me pull it up and then I'll drop it. So give me a second. I don't know if this was like, I guess the image for the model, but I guess we can use it. We'll just use it then. Because we would need like a reversal one as well. Okay. So all right, good enough. So in short, now that because this is going to be on any time frame, ideally 1 minute and 5 minute, just because it gets you, the smaller the time frame, the closer to the low that you'll be able to get. So, you know, low risk, high reward setups. The inversion model, okay, that's what it's called. It's really the inverted imbalance model because every concept has an inversion. You know, you could take a mitigation, you could do an inverted mitigation model. I don't use that. I've done it a couple times, but I don't really, I'm good on that. But in short, the inversion model is the last imbalance on the way lower to a liquidity run. When the market trades above it, as soon as it trades, well, ideally closes. When price closes above it, you can enter when it trades back into it, stop at the low, and you're aiming for a 1 to 2 RR. That's it. I mean, sure, you could hold, like if these were equal highs, I would actually hold for that, but that's not what the model calls for. The model by itself calls for 1 to 2, 1 to 2. It's good for me. It's good for you. That model is designed to grow an account by, this is going to sound bad, but I guess taking a large number of trades. And sure, you're going to take losses because you'll either get it wrong or miss something on a higher time frame or whatever. But the 1 to 2, the idea is to let the math work out. So if you're taking inversion model trades and you're 50% right, you take 100 trades, you get 50 wrong, you get 50 right, you're still profitable because your RR, right, your reward is twice the risk. So if you lose $1, make $2, lose $1, make $2, you could see how that's still growing an account without a super insane win rate. Okay, so that's the model. The last imbalance in a liquidity run, you're longing that at the high end of it with a stop at the low, and then whatever that, let's say it's 5 points. If that's a 5-point stop, not on Nasdaq, but just hypothetically, if this was a 5-point stop, it would be a 10-point take profit. In, stop, target, and you just let it go. That's what that model is. Okay? It's very simple. It's very easy. So, for example's sake, 59, 35 and a half. That's an old low for ES. Okay? Look at this run here. We have an imbalance here. We do run the low by like a point. That's not really a liquidity run. But, you know, for example's sake, if you longed, stop at that low, you target twice that. So you'd be longing right there on that down candle. Because again, after it trades and closes above it, you'd be long right here. Your stop would be here. Your 1 to 2 would be here. Okay. Now what happens here? If you just let it go, if you didn't put your stop at break even, okay, if you didn't do that, if you just let it go, you would have taken a loss, right? Oh man, that's fucking dumb, John. That's retarded. Well, you're right. I mean, I like going break even, and you know, that's that. But this is why the model kicks ass, because there's an inversion, right? There is an imbalance on the way lower. We trade through that, immediately back into it. There's your long. Stop at the low. 1 to 2 is here. So you'd be in, you'd be out, and that's it. So now what actually took place in both of those hypothetical examples, right? Watch this. Okay. Let's say you took both. All right, that's fucking way up there. All right. So what actually happens? If you lost 1% here, but you made 2% here, without obviously commission and slippage and all this shit, in the math, theoretically, you'd be up 1% on the day. Does that make sense? Or if you risk 200 here, lost, if you risked 100 here because of 1 to 2, right? If you lost $100 here, boom, then you took another, all right, I'm going to risk $100 and made 200, you're still up $100 on the day. So even though your win rate is 50%, which to me that's kind of sucks, but you're still profitable though. So it's not about high win rate by itself, right? It's about being profitable based on the math. So after that, you're not worried about it. You know, once you're able to trade near the low of the day, get your 1 to 2 and get out, that's it. You probably don't do anything else for the remainder of the day. Take your win, log out, and that's it. Does that make sense? So that's what this model does. Now, for me, what I try to do for you guys, or what I try to explain to you guys, is wait for a deeper retracement. We always talk about how a 1 or 2 point run typically isn't a stop run, but a 5 or a 10 point run below a low, that's a stop run. So that next inversion might even be better. And yeah, Top Step has a lockout feature too. So you're in a perfect world, right? You could set, let's say you're doing a 50K challenge or 50K combine, sorry. You're trying to make 3,000 without losing 2,000 total or in a row. You could do the inversion model, and you could go in with a $500 risk every trade, which is a lot, by the way. You'd have to lose 4 in a row to lose your account. So I mean, I'd probably go down to like 300, 250, 300, whatever. But just again, hypothetical scenario. Max daily limit, $300. So you can place a trade where it's like, okay, the stop loss is $300, take profit is $600, but your lockout, you know, could be $600 as well. So you could get locked out after a loss, and you could get locked out after the win. Does that make sense? So that way, as soon as you get your win, $600, boom, the account will lock you out, and now you can't take any more trades. That could be something too. That's like that's not a bad idea. So in this example, you know, again, made up hypothetical example, if your max daily risk, max daily loss limit, let's say is $500, which is reasonable for a day, then you could just divide each trade for a maximum of 2 trades at $250 a piece. Right? So that means today you would have risked $250 to make $500. You would have lost $250 here. Only a few minutes later, another opportunity presented itself where you could have got in for another risk of $250. And then that 1 to 2, you would have made $500. Right? So a $500 loss on the win, and a $250 loss on the L, you're still up $250 on the day. So you grew the account with a 50% win rate. And remember, that's only because you took the L and you didn't go break even, you know, after, I don't know, 10 points or something. So in my eyes, this would have been a break even. A little bit of drawdown, new high, there's an imbalance up here. I would have went break even and then got knocked out at break even. And then this would have been a simple 1 to 2, 500 on the day, and that's it. And you only need 6 days like that to pass a combine. Without losing, obviously. But days like this, you only, because you need 3K. So if you're taking $500 days, you only need 6 days. And then you're funded. It sounds easier than it is, okay? But you know, if you let the math do its thing, that's what it can do for you. And I mean, and yeah, Ricky, playing with either ES or the micros, sometimes the math may not work. You know, if you're trying to risk 250, but maybe this is like 300, you know, maybe you go the extra $50, or maybe it's only $200. So you take off $50, maybe you only risk the 200 to make 400. You know, there's always going to be that little, I wouldn't say margin of error, but that margin of where the math may not add up. So, but anyway, that's what I got for you guys today. Hopefully you guys learned something. Drop a like on the stream if you guys were able to learn something today. We got 50, well, we had about 75 people at the peak, but only 30 likes. So I don't know, you guys just don't, I mean, you guys don't like sniper entries or what? You guys don't like buying low and selling high or what? Now, mind you, I did take a scalp today, but hey, a gain is a gain, right? So that's it. I'll put out the market view later this evening. Y'all be good, be blessed. I'll see you here, same time, same place tomorrow on Wednesday, the 26th. Don't forget, in a couple hours, I'm going to try and do an Instagram live just to test out the Wi-Fi in the car. So hopefully it's not bullshit. It's like $30 a month for that shit, dude. So hopefully it works. You know, hopefully it works. All right. See y'all tomorrow.